What's up, everybody? Today we're going to take a look at an article written by Jim Dalrymple for Inman. Inman is the industry's leading source of real estate information. In this article, he speaks to Jeff Tucker, the senior economist for Zillow, to Daryl Fairweather, the senior economist for Redfin, and Jessica Louds from NAR, the National Association of Realtors. So let's just dive right in. The article is named "The Shift Has Begun, but Rate Hikes Won't Be the Housing's Achilles Heel." Experts told Inman that they expect home sales and price growth to slow down, but they don't think rising rates will knock everyone out of the market. They go on to say the housing market is on the cusp of an inflection point that will impact prices, supply, and demand. Jim writes, the rising mortgage rates are cooling the markets. The high rates of the 1980s and 1990s aren't on their way back, nor is a collapse imminent thanks to the more modest hikes that are taking place. They do acknowledge that a shift is happening. Jim writes, the evidence of a shift has been mounting for months, but suddenly feels like it's everywhere now. Just days ago, for instance, Fannie Mae reported that both home building and home sales are headed for a slowdown. Jeff Tucker, a senior economist at Zillow, told him that depending on the location, the slowdown may already have arrived. I think the big story here is the housing market is at or very close to an inflection point where it's about to start cooling down nationally, he told Inman. Given local variation, there are parts of the country that have already passed that inflection point. Well, this is interesting. Tucker goes on to say that Zillow's analysis of price appreciation nationally should peak and begin to decline any month now, with a plateau arriving by next spring. Though he stressed that the further out the projection, the less certainty he has. Well, we've seen Zillow's predictions in the housing market. I report on them every week, and they're still saying that we're in the double digits for the next 12 months. So I do find this very interesting. But back to the article. At the same time, Redfin chief economist Daryl Fairweather told Inman that home price drops are climbing in the national data. We're starting to see a bit of relief when it comes to new listings, she said. Tucker is also seeing the same rise in inventory, and he described the trend as a really important piece of the puzzle. That is a good indicator that buyers will have more options this summer, Tucker said. Well, yeah, Tucker, if there are more listings and therefore more inventory, then that would start to create a more balanced market. But this summer? Aren't we in summer? I mean, right now it's June 2022. Why does Zillow keep saying that prices are going to appreciate in double digits if we're going to have more inventory this summer? I mean, the only reason why I still think that prices are going to go up is because of the lack of inventory. So there seems to be some contradiction here between what he's telling Inman and what the Zillow housing prediction forecasts have been saying. Jim writes, before the pandemic, buyers having more options in the summer would have sounded unremarkable, but the severe inventory shortage of the last 2 years and the resulting double-digit price growth make any upticks in supply and downticks in appreciation significant. I agree. There are signs that the market is shifting into more buyer's territory, Fairweather said, though she added that the market is a long way from the conventional idea of a buyer's market. I agree with this too. In order for us to go into a buyer's market, we would need a huge influx of inventory. In 2008, we had all of those short sales and foreclosures because people could not pay their mortgage because the loan ballooned after a couple years of interest only. I don't see that happening anytime soon. The big driver of these shifts is rising mortgage rates. The economist who spoke to Inman noted that the rising rates have made housing more expensive and knocked some buyers out of the game, meaning demand is leveling off somewhat. A report this week from the Mortgage Bankers Association indicated that the average 30-year fixed-rate mortgage fell to 5.46%, a decline compared to recent weeks, but not enough of a drop to juice demand back up to where it was months ago. Joel Kahn, a forecaster for the Mortgage Bankers Association, described the current rates in a statement well above what borrowers were used to over the past 2 years. Yes, we all know. Rates are volatile and they will fluctuate during the day and during the week. I really don't think a small little drop is going to motivate a lot of buyers who have already decided to take a break from this crazy housing market. Whether this is good or bad news depends on where you stand. Tucker noted, for example, that fast rising prices over the last 2 years left some people on the sidelines, and many of them may welcome a slower, more buyer-oriented market. I think everybody, except for maybe the sellers, would welcome welcome a slower, more buyer-oriented market. I think a lot of those folks, a lot of millennials, maybe a lot of people in Gen Z are hoping for a correction, hoping to see prices come back down, Tucker said. Like I just said, I think unless you're a seller, everybody would like to see a correction and have prices come down a little bit. I mean, just to make a more fair housing market. Don't misunderstand me. I am a homeowner. I always want prices to appreciate because I want my home value to appreciate. But this market's gotten crazy, and with that coupled with inflation, I think we would all welcome a little bit of a correction, just not a crash. Let's continue. Jim writes, despite the hopes of sidelined would-be homeowners, neither Tucker nor anyone else who spoke to Inman for this story envisions any major price drops in the near future. In other words, while the rate of price appreciation is widely expected to slow, that doesn't mean it will go in reverse. This is what I've been saying all along, especially where I am here in the DC market. I just don't see any type of crash. Like I said, I just don't. We'd have to have so much inventory for that to happen. We're still expecting a year from now that prices will be higher than they are now, Tucker said. Well, yeah, I hope so, because Zillow keeps saying they're gonna be in double digits this time next year. So I hope he's at least saying that he sees price appreciation in a year. Jessica Louts, president of Demographics and Behavioral Insights at the NAR, the National Association for Realtors, agreed and noted that a bubble is unlikely because of hot buyer demand still exists. Like other experts that spoke with Inman, Louts pointed to rising interest rates as a factor in cooling the once red-hot housing market. But she also said the trend towards rising rates should slow. Interesting. Our current forecast says this is about where rates will go, she said. We don't see them rising substantially more. Now this is interesting. She doesn't think that interest rates are going to go up much more. I don't know. What do you think? We're already just about at 6. How high do you think rates are going to go in the next couple months or by the end of the year? Put a comment below because I really do want to know. While current mortgage rates may be a shock to homebuyers entering the market for the first time, they're low compared to historical norms. The early 1970s began with average rates in the low 7% range, according to the St. Louis Fed, and they steadily rose to more than 18% in the 1980s. Rates didn't fall to below 6% until the early 2000s. Looking at the St. Louis Fed's graph, the spike in our rates is notable, but nowhere near where it was in the 1980s. Inman asked the experts who spoke out for this story if they envisioned rates returning to the highs of the 1980s and the 1990s. They didn't. Could you imagine 18% interest rate to buy a house? Who could afford anything? That's kind of crazy.
They end up buying some shit that's too expensive on credit, and the banks win, man.
Fairweather instead said that the trend towards low rates is tied to a variety of economic conditions. For example, the U.S. becoming a more desirable place for foreign investment. No one has a crystal ball, but Fairweather said the conditions that led to lower rates still exist, and she expects the spikes to be temporary. Well, that would be good news. If these interest rate spikes are temporary and they go back down and we get more inventory and create a more balanced market, I think everyone would be happy. Once these inflation woes are resolved, she explained, rates will start going in their long-term trajectory, which is down. I hope she's right. Fairweather also doesn't see a bubble on the horizon, saying that the current shift is likely to be a more minor moment of cyclicality akin to 2018, rather than a monumental change like what happened in 2008. We don't expect there's a national home price bubble, she said. The article ends with Fairweather advising people not to time the market, but simply buy a house when you need to buy a house. And Tucker saying that the last 2 years have been great bargains while the interest rates were historically low. And his biggest fear now is that builders aren't going to build as fast as they have been, which could keep inventory low and therefore the market unstable. So what do you think about this article? It sounds to me like Tucker, who is the economist for Zillow, is definitely being more conservative than the previous Zillow forecasts that I've been reporting on. And Fairweather from Redfin, who I've always believed had a more balanced view of the market, is being cautious but still does not believe that we are in a bubble or that we're going to crash. So now I want to hear from you. What do you think after reading and listening to this article with me? Who do you believe? What do you think? What do you see where you live? I really do want to know. I hope you got some value out of this video. If you did, please consider smashing that like button, telling a friend, and subscribing to our channel. It does help us with the YouTube algorithm and motivates us to make more videos. I really do try to bring you guys the latest news and reports of what's happening in the housing markets. If you are thinking about moving to Maryland or DC and you'd like our help, just send us an email, we'll set up a Zoom, we'll get you started. Thanks for watching, I do appreciate it. Bye!